Hello, everybody. Happy Friday. Well, this has been quite a week for a lot of reasons. Um, and we're at lifetime highs again. What else? For the bulls, it's like tailwinds galore. The trade deals seem to be happening. The whole Liberation Day craziness seems to have become just completely irrelevant. That was smoothed over. Earnings are coming in without any real shockers, and everybody's happy. So it just keeps notching up new highs all the time. Under the surface, there's some cool stuff going on, and I'm been having a bit of fun this week with this market. So let's look at the charts together and rest up this weekend, because next week is like the last final hurrah as far as the earnings season goes. So let's jump on in. As always, we start with a spider, and as always, it's up. Here, of course, is the April 7 bottom. We all remember the weekend before. It was right on the heels of Liberation Day, and everything was collapsing. It bottomed just minutes after the opening bell. It really bottomed the Sunday before, if you look at the ES. And then it's been up ever since in sort of two broad stages. One was this just like snapback, explosive recovery. And since then, in more of a calm manner, like so. And you can tell in a way, if we can just anthropomorphize these price bars, this is a more confident chunk of time than this one. Why do I say that? Well, it's a bit of a mix. There's a lot of red mixed up in the green, a lot of uncertainty. It went up, but it was more halting and got scared here and there. Since then, it's just been just like relentless and just a fervent rise higher. So here we are, lifetime highs on the spider. Diamonds, kind of the same deal. We'd had a lifetime high close on Wednesday. We're in that neighborhood now, but we're just kind of, for the past 3 days, just kind of hanging out in that zone. And this is the gap up we had on Wednesday. Even more dramatic is XLI, which used to be pretty much in lockstep with the diamonds, not anymore. XLI has been especially strong. And you can see here kind of the same phenomena, this snapback, explosive rally, kind of this halting, timorous movement here, and then this resolute push higher to lifetime highs day after day after day. And of course, a particularly strong sector continues to be finance. XLF, the financial sector, lifetime high intraday, almost certainly a lifetime high close. And the gap up on that one was down here where this dashed green line is, and it hasn't dared cross it since then. So all systems go in bull land. Yesterday, the only really notable earnings was Intel, INTC. That's down pretty hard. Whoever was hoping for a big recovery on this was probably disappointed. As I mentioned yesterday, it's been kind of an interesting history with Intel. Back in the 90s, it was the NVIDIA of its day. It could do no wrong. Intel Inside was everywhere. And everybody used the chips, and it was just a phenomenon. It was the absolute blue chip of the Silicon Valley. It hit some real rough sledding here, lost a tremendous amount of its value, the vast majority of its value, and has been trying to recover since then, and did so with some success, but that kind of ended back in 2021. And since 2021, which was the lifetime high of Intel, it's moved from the 60s down to it's barely hanging on, is almost in the teens now. So it's lost 2/3 of its value in just the past 4 years, which for a tech stock is a pretty poor showing. And then more recently, for basically the entirety of 2025, it has been just banging around as a $23 stock plus or minus a few bucks. So today's drop is pretty big, but it doesn't really change the fact that it's still in that year-long range. So yeah, down she goes. NVIDIA is plunging by 4 pennies right now. It's basically an intraday lifetime high. It's kind of just marking time here. There's no particular reason this should be moving. Intel, of course, has zilch to do with NVIDIA's world. So we got a little doji up there just kind of hanging out doing nothing. SMH, the semiconductor ETF, is also down by the tiniest little bit, just a few hundredths of a percent. It's been pretty dull for the past few weeks, as you can tell, just been kind of meandering around this zone. Really nothing to compel it one way or the other, just holding on to those massive gains that it had enjoyed for April, May, and June. What else is going on? Well, over in Japan, EWJ, we didn't really look at this a couple of days ago when it was really soaring, but EWJ exploded higher on Wednesday. On Tuesday night, I guess it was, they announced a tariff deal with Japan. EWJ jumped to a lifetime high. It made another lifetime high yesterday, and has burned off a portion of that. We're down a bit more than 1% on Japan. In other parts of Asia, China, which I shorted FXI yesterday, this is down about 2/3%. And my rationale of this was pretty straightforward. It's all about this trend line here, which goes back for decades. And just time and again, repeatedly, you can see again and again and again, we've approached the blue line and then beat a hasty retreat. And so that so far so good on the FXI short. Over in metals land, it's kind of doing what I expected, which is burning off some of those big gains recently. I have described it somewhat ineloquently as pooped or weary or exhausted. I still am a big believer in metals long term, but it's gone really far, really fast, particularly stuff like palladium. And we are burning off some of those gains, kind of backfilling. And so here's silver SLV. We've burned off pretty much all the gains from earlier this week. So we've sort of undone the week. We're back to last week's prices. OUNZ, which is an amalgam of gold and silver, is also down about 0.9%. This is the key up here. It has not so far mustered the strength to push past that resistance. And if it does, I think we'll have a whole new leg up in this bull market. As I said, palladium, which I've been kind of obsessed with for a few months, this had kind of a halting climb here and then has really just exploded higher without hesitation. But that stopped on the 18th. It essentially opened at the high and fell for the day. And so we've been slipping on that one. We're pushing back into this green zone down here. And this could stay weak prospectively until almost 100, down there where that gap is. So there could still be plenty more weakness there. And platinum, represented here by PPLT, also plenty of potential room to the downside. This is a very gappy instrument because it's quite thinly traded, so it doesn't make quite as much sense to look for a gap as resistance or as support. But we could, kind of worst case rough it out roundabout where that green zone top is. And it's kind of a different angle to the whole metals thing is the XAU, the gold sector, which, as I pointed out before, is in this very long, like over 10-year wedge, like so. And we remain way up here, mashed up against this level, which I think, if history is any guide, and the entire premise of my charting is that history is a guide, this is expensive and way more likely to move lower than higher from these levels because 11 years say so, instead of just hope and bluster and narrative. The price data indicates it's very expensive right now. So that's XAU. Over in the non-tangible world, here's Bitcoin, which is taking a pretty decent hit. It has lost thousands of dollars since last weekend. In the grand scheme of things, nothing really, just a little bit of a shave. It peaked here when there was that sort of whole flurry of pro-crypto legislation going. It peaked at just over 123,000. We are about a little over $6,000 below that right now, but percentage-wise, it's pretty modest, about a 5% shave. It's still bullishly configured unless it cracks below, I would say, something like 109,000. And it starts to look pretty ill. But it hasn't done that. It's nowhere close to it right now, so that's just conjecture at this point. MicroStrategy, which is almost completely dependent on Bitcoin for its own fortune, is softened up as well from its own price peak, like so. And Ethereum, the number 2 coin up there. What we've been watching on this one is this peak here, which it didn't even manage to get close to. So this is, and that's not a lifetime high. The lifetime high is way, way, way back here, a good 4 years ago. More recently, this lower dashed red line represents the peak back in March of last year, and a couple of times in December of last year, and close to it a few days ago. It's weaker than it was then. So if Bitcoin starts selling off, I expect Ethereum will sell off rather rapidly. In the healthcare world, these have been so bashed and battered that bargain hunters are starting to show up. United Healthcare, which has had a calamitous fall, has been beat down to this level. And particularly earlier this week, there was talk of a federal investigation, but it's up a little right now, about 1/3%. It looks very, very unstable. I mean, that there's precious little support on this chart. And, I know it's been bad, but it does not look particularly oversold to me. CNC, a bit more of a case for being oversold. It hasn't had the negative press to the degree that UNH has. It sold up very hard all through here, and it's finally having a little bit of a fight back. So for those who dare to catch the plunging knife, that could be an interesting one, and they're doing it today, over a 6% pop in CNC. Okay, got a couple of minutes left. We'll pick up the pace and just bang through some cash indexes here, just kind of see what's what. The Dow Industrials, the NDU, very close to a lifetime high, not quite there yet. Would not take much. The transports, however, still look very vulnerable to a slip. These look bad. Irrespective of what the Dow 30 looks like, the Dow 20, the transports look very, very prone to a fall. Mostly, I'm sorry to say that things look like they'll just keep going up until they stop going up. There's very little to say about stuff which just muscles its way to lifetime highs virtually every day. Things like the S&P 100, the S&P, and there's the 500, here's the 100, the OEX, the NASDAQ 100, the NDX. I mean, it's just, like Hercules right now. I don't know what exogenous event could possibly stop these, but trees do not grow to the sky, but so far they have. And then the CompQ, the NASDAQ composite, same deal. It's so strong even that this trend line here has been rendered moot. My supposition was that it would provide some kind of resistance. Nope, it is just so strong, it just keeps plunging higher isn't quite the image we want, but there you go. But all in all, the thing is that fear has completely left the building. Can't even be found anymore. The VIX has plunged back into the 15 zone, pretty much as low as it's gotten for years, except for some rare exceptions where it gets to 13-ish, 14-ish, but it has been beaten down to a level which insurance is cheap, I would say. Anyway, that is the bottom of the hour. That is the end of the week. July ends on Thursday. We'll have the Fed on Wednesday and lots of earnings going on.
If you're not subscribed, subscribe right here. And if you want to meet me and the team in person at our next live event, hit the link at the top of the description.